Hi, this is the PIM Trader. Let's review what happened in the stock market last week. We will start with the S&P 500, the SPY. On Thursday, we saw the price break above the 50-day moving average, which is a good sign. And then on Friday, we saw a follow-through where it moved higher. It started above the close and it ended higher. This is a very good sign of strength. The price is now very close to the 200-day moving average. On the weekly chart, we see the price getting very close to the parabolic SAR dot. This is a very good sign of strength because once the dot moves under the price, it acts as support and increasing the likelihood of the price moving higher. Also, we see in the weekly chart that the price opened above the last low right before the market sell-off, and it is now more than halfway above the low before that. So all signs are pointing to strength in the S&P 500. Next is the NASDAQ 100, the QQQ. The QQQ also opened above the 50-day moving average on Thursday and it followed through higher on Friday. The price did touch the 200-day moving average line on Friday. It did close slightly below it. On the weekly chart, the price did touch the parabolic SAR dot that was above it, and now it has moved under. The dot is now at the low of the crash from the week of April 7th. This is a very good sign of strength because now we have support on the parabolic SAR. So far, all the signs are pointing towards strength in the stock market for the QQQ. Next is the Dow Jones Industrial Average, the DIA. The DIA closed right at the 50-day moving average line on Friday. It is still a little bit a ways from the 200-day moving average line. On the weekly chart, the price is still quite a ways away from the parabolic SAR dot, but as we can see, the price did close above the downward trend line on the weekly chart and on the daily chart. The Dow Jones is a more of defensive than the QQQ and the SPY. So it will move a little more slowly, but this one is showing signs of strength as well. Not as strong. Typically, growth stocks like the QQQ and the SPY tend to move faster in a bullish market. Next is the S&P MidCap 400, the MDY. This has definitely shown a character change. As mentioned in previous videos, it has been in a downtrend since December of last year. The market sell-off seems to have created conditions to allow it to do a character change with the rest of the market. It has been following this upward trend line, and on Tuesday and Wednesday tested trying to break above the downward trend line. On Thursday, it definitively broke above the downward trend line and the last low before the market sell-off, and it opened much higher on Friday. On Friday, the price opened above and stayed above the 50-day moving average line. It's still quite a ways away from the 200-day moving average line. On the weekly chart, the price did touch the parabolic SAR dot that was above the price, and now it has moved below the price around where the market low was during the sell-off. This is another sign that the mid-caps are doing a character change and looking way more bullish than it has been since December of last year. The Russell 2000, the IWM, opened around the 50-day moving average line and closed above it. It also on Friday gapped above the last low before the market sell-off. It is much further away than the other indices from the 200-day moving average. Another indicator that the small caps are showing a character change is that the price touched the parabolic SAR dot and now it has moved to below the price around where the market sell-off low was. So just like the mid caps, the small caps also are showing a character change and looking much more bullish than they have been since last year. Next is gold, the GLD. We have been mentioning that When the price gets into the hold zone, it is best to avoid buying new positions and look for a different entry point. The reason is the price could be overextended, it could fall, it is no longer an optimal buy zone. Well, as we've seen since almost 2 weeks ago, the price hit a peak and has been in a slight downtrend ever since. So far, it looks like a small correction. It's undecisive whether it is undecisive whether it is a top. The price is still a little bit away from the 50-day moving average, so it is holding that support. The 200-day moving average is much further away. On the daily chart, the price has touched the parabolic star dot that was below the price, and now the dot has moved above it. So now there's short-term daily resistance. We will know if the price has reached a top when or if the dot that is currently below the price reaches the current price. So if we see another week or two of continued down prices, the price and the dot should meet and the dot will move above the price and acting as resistance. In conclusion, gold is still not a buy. It may be presenting a new buy opportunity in the coming weeks. Next is silver, the SLV. Either last week or in the previous video, we mentioned that silver entered the buy zone, but the price action wasn't looking as strong as it could be, and to watch it. So on Tuesday, the price started a short downtrend following similar price pattern that gold has been following. It reached a peak the middle of 2 weeks ago, and it seems silver has found a similar peak just on a 4-week basis and has been following a similar downtrend as gold has, just not as sharp. Silver does not move as quickly as gold. The price did fall below the 50-day moving average on Wednesday and has stayed below since. So right now the price is below the 50-day and the buy zone, so it's not time to buy yet. There may be an opportunity to buy for aggressive investors. Just keep an eye on it to see if it develops. Last on the list is Berkshire Hathaway, the BRK.B. The price is at the last peak from April 2nd. The price is still in the hold zone as well. We had shared some buy opportunities in previous videos when the price dipped into the buy zone, when it dipped again into the chase zone. Given that the indices are looking bullish, it is not a good time to consider buying. So for those of you that are holding and took advantage of these buy opportunities as a result of the stock market sell-off, congratulations, you're doing well. And that's it for this week. This is the Pimp Trader.